If you wanted to bet on MicroStrategy, MSTR, with 2 times leverage in a single ticker, what would happen? You'd think a 50% move in MSTR becomes a 100% move for you. Simple. But the MSTU ETF tells a very different story. Last year, MSTR was down 53%. MSTU, which is supposed to amplify that 2 times, was down 91%. That is not a typo. MSTU is the T-Rex 2X Long MicroStrategy Daily Target ETF, run by Rex Shares and Tuttle Capital. It launched on September 18, 2024. Its job is simple. Give traders 200% of MicroStrategy's daily move every day in one ETF. No options account, no margin, no portfolio approval needed. That pitch landed. MSTU pulled in $72 million in its first week and has grown to roughly $333 million in assets. Retail traders piled in because MicroStrategy is essentially a public proxy for Bitcoin, and adding 2 times leverage on top sounds like a turbocharged way to ride the crypto wave. Here is how it actually works. Every single day, MSTU resets to 2 times the daily return of MSTR. Notice the word daily. If MSTR goes up 10% today, MSTU targets 20% today. Tomorrow morning, the leverage starts over from the new price. That daily reset is what makes leveraged ETFs different from simply borrowing money to buy MSTR. Here's what they don't tell you. Daily reset leverage decays in volatile or sideways markets. If MSTR drops 10% on Monday and rallies 11% on Tuesday, basically flat, MSTU finishes meaningfully in the red. Volatility eats the math. MicroStrategy's volatility is roughly double the S&P 500, so daily reset leverage on a stock like that is almost designed to bleed. It gets worse. MSTU was originally backed by total return swaps, but as the ETF grew, the swap counterparties hit position limits. The fund manager switched to listed options for exposure. Options introduce extra tracking error around big moves. There were specific days where MSTR fell 2% and MSTU fell 6%. Math says it should have been 4%. The structure leaks. Why does the catch exist? Because compound math is not the same as simple math. 2 times the daily return is not the same as 2 times the long-term return. The product is honest about it. The prospectus literally tells you not to hold it for more than a day. But that warning gets lost when the marketing says 2 times leverage in one ticker. Performance has been brutal. As of early May 2026, MSTU is down about 4% year-to-date, while MSTR itself is up over 16%. The expense ratio is 1.05%, over 5 times what a typical equity ETF charges. Volatility is just under 40% annualized. So who is MSTU actually for? Active day traders who hold it for a few hours, not buy-and-hold investors. It is a tactical instrument, not a portfolio building block. If you want long-term MicroStrategy exposure, just buy MSTR. If you want long-term Bitcoin exposure, buy a spot Bitcoin ETF like IBAT. MSTU is for someone with a strong directional thesis on MSTR today and the discipline to close the position before the close. Honest caveat. Leveraged ETFs have a long history of separating retail traders from their capital. The math is doing exactly what the math does. The product is not broken. It is performing as designed. The investor expectations are what's broken. If this video helped clarify why daily reset leverage is so deceptive, hit like and subscribe. And drop a comment below. Would you ever hold a 2x leveraged single stock ETF for longer than one day? I read every reply.